Can I invite you to give a general summary of the government's position as it stands on the financial transaction tax? How likely you feel that it might come about? And originally I was going to ask you about the different applications for EU 17 in the euro area and EU 27. But I now add a further question. If one member state, as France has declared that it will do, sets about introducing an FTT, how does that change the government's view of the various ways of introducing this tax?
Well, I'd say this, Lord Harrison, is our view has been that we have no objection in principle to an FTT, but the reality is it has to be applied at a global level, because otherwise business would simply restructure their transactions so that the transactions would take place outside the area in which the FTT would take place. And if there was a EU-only FTT, then businesses would seek to transact business outside of the euro area. And I think we can see from the Commission's own impact assessment the negative impact that an FTT would have on growth and jobs. At a time when the European Union needs more growth and more jobs, this would be a very unwise thing to do. And that's been our position in discussions in the European Union. I don't think we're alone in expressing concerns about the FTT. If you talk to our Swedish counterparts, they went through a process of introducing an FTT. And when I talked to the Danish finance minister in London a couple of weeks ago, she was very grateful for them doing so because it helped boost the financial sector in Denmark. It also helped boost the financial sector in London as Swedish firms relocated business here to the UK. So we have evidence around us of the impact that a financial transaction tax can have on shifting business around on a global basis. Now, if the Eurozone wished to proceed on this by themselves, then that's clearly a matter for them. If they wanted to use EU institutions, they could do that through the enhanced cooperation mechanism, and that would clearly be a choice that they would need to think about. In that sort of situation, London would be affected in the same way that Hong Kong, New York, Singapore would be. It would be all major financial centres outside the Eurozone, all affected in a similar way by a Eurozone-only FTT. Of course, it is the prerogative of member states to decide individually if they wish to impose an FTT. President Sarkozy made an announcement earlier this week about that. It's interesting to note that they did have a similar tax that they abolished in 2008 to encourage, so that they encouraged international businesses to relocate to Paris. So there's a slightly reversal of position there. But again, that's a matter for national governments to decide whether they want to have their own FTT in the same way that we have a stamp duty, in the same way that we introduced the bank levy in the 2010, in the 2011 Finance Act. So these matters are for national discretion. We happen to think that a EU-wide financial transaction tax would be injurious to the interests of the European Union as a whole. And the only way you could have a financial transaction tax that worked would be to introduce it on a global basis.
Lord Flight,